Good evening, everyone. You're all very welcome to another market update of what's happening in the financial markets. Obviously, of course, a fairly interesting closure last week with obviously stronger dollar play continuing to factor into conditions, euro, cable. And we've seen some interesting movements in the price action in the FX markets. And of course, that's reciprocated back into the yield markets, into the commodities, which have obviously seen gold continue to drift lower into the weekend close, despite some of the Putin comments on Friday and kind of the slight tilt in terms of geopolitical tensions escalating as well. Indices has still continued to grind lower, although we have seen a little bit of recovery today. So we will obviously be going through all of these different pieces of economic data from last week's perspective. That higher than expected PCE, the lower than expected obviously growth figures, the GDP figures, and of course looking ahead to the next couple of days in the markets. So I suppose without further ado, let's get into it. I suppose last week, when we look at that broader data front last week, of course, let me just go back to last week on our calendar. As I said, the two big talking points really last week was that weaker than expected GDP figure growth, obviously coming in lower than expected. That kind of recessionary indicator that we've talked about for the last couple of months or so, still very much present, still alluding to it in the sense that it's been reciprocated in the data. And of course, as well, with the PCE, which of course means higher than expected personal consumption expenditure. Higher than expected personal consumption expenditure is one of the big things that the Fed is obviously looking for. And of course, higher than expected PCE on Thursday and Friday obviously means that people are spending more for goods and services compared to where they were a year ago. It means expenditure within consumption expenditure is obviously higher. You only have to look at materials being higher, food being higher, energy being higher, and of course that mandate that we've seen pretty much since the back end of 2020, broadly speaking. So German growth GDP was obviously lower than expected on Friday. US GDP was obviously worse than expected on Thursday, coming in at 2.7 v 2.9%. So we've talked about this soft landing. This idea of soft landing means, can they avoid recession with very, very marginalized or very, very low growth environment, even in the face of higher inflation? Well, of course, that's going to be the big talking point over the next 3 or 4 months. And of course, as we come into March now this week, and of course the 10th of March, the week after, having NFP, the third NFP for the year, we're then very, very closely watching to see, because of course the jobs numbers is going to significantly impact both growth, both production, but of course employment as well. Because of course, if we start to see those employment numbers ticking down and start to reduce, monthly jobs reports, the weekly, even the initial jobless claims, and of course the labour participation rate to decrease, that of course puts broader pressures on the economy as well. So it's important to understand that narrative. So broadly speaking, even last week with all the data that came out, central bank policy is still very, very much bullish. We saw the RBA last week obviously increase rates quite significantly. Again, 50 basis points coming in there. So the RBA is 4.75 on the rate. So again, very, very hawkish approach there. As I said, lower than expected growth both in Germany and obviously in the US. PCE ticking up, harmonized consumer prices remaining quite elevated. So it obviously means that there's still quite a bit of underlying pressure. And of course, in the last 2-3 weeks or so, that's very much fueled that dollar recovery, particularly from the early parts of February, where we had that inflection point in the dollar, where we've seen that kind of movement from 101.80, 102 in the index, all the way back up into 105, where we're currently trading today. Now, of course, we have seen a little bit of movement today, but we'll talk about that separately. So that's really kind of where we ended up last week, broadly. Now, if we look at the week ahead, of course, let's just look at the first couple of days of this week. So obviously not that much happening today. We've had some kind of durable good data coming out pretty much on par in terms of the non-defense and of course the excluding transportation. If you exclude defense, obviously coming in worse than expected, with the broader durable goods again coming in consensus -4, coming in -4.5. So that's obviously still a little bit worse than expected. So that's obviously bringing us into tomorrow. Of course, tomorrow we've got Swiss GDP. Again, we've got Cunliffe, Mann and Pill coming on the wires out of the Bank of England. We've got Canadian GDP. We've got the House, the Schiller case the S&P Case Shiller House Price Index. So that'll be something to watch as well in terms of economic data. And of course, setting the tone then for Wednesday, which of course then we have a raft of data out both in the Asia session with Aussie and China, non-manufacturing PMIs. Aussie GDP is going to be a very, very interesting one. Then we've obviously got local figures here in Europe with the German unemployment. We've got PMIs in Spain, Germany, and Italy. And of course, then we have got ISMs on Wednesday afternoon as well, in obviously the US as well. So that's obviously going to be something to pay close attention to. So again, we're getting busier. Data is really starting to pick up now quite regularly. We've got a lot of central bank speakers. We've got data coming out in multiple jurisdictions, whether it's Germany, whether it's the Eurozone, whether it's the US, whether it's Asia. So there's a lot of information flowing continuously into the market. So if you're a day trader, you're a news trader, a lot of visible opportunities there as well. Now, of course, we do have European data coming out on Thursday. Now, we're going to do another call probably on Wednesday just to factor in the back end of data this week because there's so much information. So, of course, Wednesday, we'll be kind of looking at Thursday and Friday for the rest of the week. But there's a lot to keep us going. I think tomorrow, as I said, Swiss GDP, Canadian GDP, the data in the US just after the open and just before the open, I think is going to be interesting. And of course, pound is going to be interesting. It's going to come into focus, as I said, with Cunliffe, Hill and Mann. So Deputy Cunliffe is a fairly prominent member and obviously well-spoken individual as well. So worth keeping a very, very close eye on that as well, broadly speaking. So if we go back into the price action from where we were last week. So the big talking point last week, we've mentioned it, actually even longer than that, nearly now for the last number of weeks, is the idea of the DXY going back into that 105.50 level around 105.30. And we can see very, very clearly how the markets has actually taken that right on board. So we've had that elevated move tail end of last week. We've had a little bit of a breakup today. And of course, a very, very clear sell-off in the dollar. So we start seeing a little bit of a recovery, that inflection again, going from risk off to risk on and back into risk off again. Dollars coming off slightly. So we've seen euro elevate to the upside. We've seen cable elevate to the upside. We've seen the indices make a very, very decent run up today. And of course, that means with the weaker dollar, you get risk on aggression. You've got sentiment directly focusing back into riskier asset classes, out of dollar, out of treasuries, into riskier assets. And we can see that obviously very, very clearly as we look at sentiment today. Obviously, with that dollar move, we've gone from 105.30 all the way back down to 104.70, where we were really on Friday or very late Thursday night into the Asia session on Friday, trading back in at 104.50 or just marginally above it. Now, also, you can obviously see two moves here, two blue boxes. That's obviously symbolizing January NFP and February NFP, which are the two largest single daily moves in the dollar in the last couple of months. And of course, next Friday, not this Friday, the following Friday, 10th of March, we do, of course, have the next NFP. So I wouldn't be surprised to see dollar come back up here again, have another run of short-term strength back into this level, continually accumulating in this region. Okay, we've got the initial reaction. Wouldn't really be surprised to see an inflection point rerun back up into these levels. Now, whether that plays out or not, let's wait and see. But from a higher time frame perspective, it would give a clear rationality for that progress. Now, of course, the February NFP, very, very clear run up all the way back up, following the January NFP sell-off and consequential slide in January all the way back into this 2022 summer low at around about 101.50. So, of course, as we speak, short-term perspective, dollar bearers have been in play today, but of course, wouldn't be surprised to see that level out and maybe for a rerun back in. But we'll look at that in the retrospective FX pairs now shortly. Now, again, also with that, the big talking point I was kind of looking at on the yield situation was up around 4%. We have got very close to it last week, coming in at around about 3.98%. So that's really kind of given us the focal point now that can we see maybe the 10-year focus in around about 4%, maybe that kind of run in dollar weakness, and then obviously seeing the yields go lower in symmetry with that as well. So there's obviously a very, very positive correlation with government bond yield in support with the DXY. So generally both of those move together. If one's higher, the other's higher as well. Now the reason why that is the case is because obviously the higher the yield, the higher the sentiment for dollar denominated debt, right? If people are buying dollar denominated debt, that generally means that they're looking for a safer place to store their capital during times of maybe that shift in sentiment. So of course, one of the safest places at this moment in time within the broader markets, of course, is buying dollar denominated debt because of the risk of default being so low. So of course, with that being the case, obviously means that there's been a bit of an elevation into dollar treasuries. Now, whether that remains strong, you only have to look at the 1 year today at around about 5%, be the dividend in the S&Ps at around about 1.7%. So again, you can see that broadly, that narrative was to hold up, you'd earn 3 times more holding government bond yields rather than having a yield associated to stock market indices. So it's just about understanding investor sentiment as well. It's not just about the retail traders. Of course, you've got investor sentiment coming through as well, those kind of medium, longer term investors via those short to medium term traders as well. So it's important to look at that perspective. Now, as I said, if we migrate into the FX pairs, so I suppose firstly and foremost, as the price action was moving lower last week, I said really kind of focus on this area here between 105 and 106. Of course, we've got the daily point of interest kind of liquidity area there at 106, but there was also a 4-hour level coming in just below that at around about 105, 105.20. And you can see those two levels very, very clearly. Now, of course, today, as we said, let me just delete that off the thing. As we said, obviously with the euro, with that weaker dollar today, we've obviously seen euro dollar rally back up above into this 106 level. And of course, that's where price action is currently floating at, somewhere between kind of 105.80, 106. Now, we did try and break comfortably above it. We've seen a wick rejection. Price action into today's close is just about gathering steam just above 106. So that would be an interesting level because, of course, if you isolate the price action through the course of February, very, very clear selling bias into gradual bearish order flow. Lows, lower highs, lower lows, failed wick above a previous high, ultimately unwinding, creating new lows. And then, of course, last week with that selling opportunity, short-term selling opportunities back into these levels, we talked about that as well. So price action obviously making a little bit of an unwind. Now, whether this continues or not depends on the severity of today's dollar selling, right? Does today's dollar selling continue? If today's dollar selling continues, let's say maybe back into 104.50, then really short-term perspective, we should see euro dollar bulls remain a little bit elevated to the upside. Now, again, if we look at GBP USD moving across, structurally speaking, again, very, very similar narrative, very, very clear lows, lower highs, and then obviously lower lows, lower highs, lower lows continuously last week back into this value area at 120.20. Now, this area here was kind of where I was looking at to see would we see any sort of buying coming through. But of course, as the dollar continued to gain strength into the weekend, we actually saw 120 completely break through with price action moving lower back into these local bottoms down here around about 119.40, 119.50. Now, of course, subsequently today, with that stronger move against the dollar, obviously DXY weakness, we have seen the inverse, and of course we've seen GBP USD move back into this 120.50, 120.60 level. So for me now, that would become probably the more important area over the next couple of days to see how does the price action really develop and react in this prominent level up here to see if there is any sort of reaction. But of course, then if that DXY weakness really continues to break through, then you're looking for order flow really to push beyond some of these short-term lower high liquidity areas on the way down from last week and really becoming mitigated as price action continues to progress higher. So that's really something to be very, very conscious of in this week. But I suppose as well, if you look at it as well, we've got lower lows, lower highs, lower highs, lower lows, lower highs, very, very clear order flow last week back into test local bottoms, and of course ultimately failed to break materially below that. So that's something to keep an eye out on here around this 120.50 level. Now, moving across the dollar yen, last week we talked about the fact that price action was creating bullish order flow. We look for that dollar movement, dollar strength to continue. We mentioned this 136.50, 137 level last week. Very, very clear run up, and of course we had multiple breakthroughs even from last week. Very, very clear run up back into liquidity value area, points of interest. Nice little run up again, bullish order flow, another lower high tail end of last week on Friday. And of course, that massive run up on Friday afternoon as price action gathered a lot of steam on the dollar back up into some of these upper levels. Now we are kind of faltering, we are consolidating here underneath 137. Really was looking for kind of 137 to be hit, or at least 137, 136.50. We have just wick rejected 136.50, but it's kind of faltered. So really just waiting to see if there is any sort of final move back up into this liquidity level over here. You can kind of look, you can kind of see that visibly. And if not, then seeing does the accumulation start to develop below 137 in this shorter term level today. Now, obviously Monday, still very, very early in the week. If you look at short-term order flow, you can actually see short-term top lows. We've seen order flow breaking to the downside this afternoon. We've pulled back up, rejected this area, short-term area of liquidity, and it's starting to sell off as well. So that's maybe potential clue that we could see some more downside coming in this one, but obviously let's wait and see. NZD, USD. So I suppose the last of the FX pairs, just kind of giving a little bit of differential considering the volatility we had last week. We talked about NZD, USD. Let me just remove this for a second. Clear bullish order flow, highs, higher lows, new highs again, ultimately failed at this 65 level we talked about. Very, very clear level back into this short-term area here around 62s. And of course, ultimately, we've broken through 62s, breaking to the downside as well. And if you're looking at order flow price action, very, very clear as well last week. Structured movements, declines, gradual assimilation to the downside after what's been very, very clear order flow. And of course, last week as well, breaking down aggressively on Friday into this area. Now, structurally speaking, as I said, that little bit of dollar weakness, as we talked about, pulling back to the downside is allowing a little bit of a short-term recovery on Kiwi dollar back into the 66.20 levels. So I suppose at this moment in time, if you look at the FX pairs, order flow is still very much bearish. Lower lows, lower highs, lower lows. The order flow has broken out of this, I suppose, accumulation area here. So naturally enough, you would like to see some sort of reaction back into this area up here before we maybe simulate even further to the downside. So that's what I'd be looking at personally. I'm sure if we opened up the Aussie as well, if we open up the Aussie very, very quickly, just give me a second, guys and ladies. Open up the Aussie AUD USD. DUSD. Open that up very, very quickly. I suspect that it's going to be an almost identical move. Yeah, it is. It's very, very kind of structured, very, very similarly. So this was a setup I actually kind of looked at last week, very, very quickly, all the way back up to the value level. Very, very clear declines. The order flow is still ticking there, very much to the downside. So we have obviously liquidity levels around 66, 66.50. But I suppose short-term perspective, you can see it. Lower lows, lower highs, lower lows, lower highs. Very, very clear bearish order flow. Probably trying to work back up into 68. So I'd like to see 68, maybe being a run up back up into this level here. If we look at maybe the 1 hour order flow, you can kind of see it there balanced quite nicely. Very, very clear order flow. Get back up into this level and then allow for maybe a deeper run to the downside. So if you're selling, wait for those pullbacks, wait for those corrections. I think it'll give you a little bit of clarity. Now, moving across to the commodity markets. Okay, so gold, that decline in gold is just continually to rigorously play out. We had a little bit of an area down here around 1820. Let me just delete that. 1820, 1825 last week. And of course, that has been broken through on Friday. So there was a lot of guys, even I've been kind of reading online analysts kind of looking for a hedge in gold, buying gold into the weekend volatility with some of the Putin comments. But of course, the simple play is look at the dollar, right? If the dollar is continuing to pick up strength, then really there's not going to be that much of an appetite for people to want to buy gold unless there's a war, unless there's bombs being dropped, unless bullets are flying. And really that was never going to happen at the weekend. So hence, obviously, gold has remained very much elevated to the downside. We've broken through kind of the structured price action level here around 1820. We've actually broken through temporarily. We're now pulling back up. So I would suspect price action is going to revisit this level and then seeing again if there's any sort of reaction. If we bring in, let's say, 1 hour order flow for a second, you can see that playing out very, very clearly as well. Order flow, holding on, very, very clear break, finding short-term bottoms, pulling back up. Would expect gold to revisit this 1822, 1824 level to see if there's a subsequent reaction. So worth keeping an eye on that. You've obviously got order flow here because you've got lower highs here, you've got lower highs here, and you've got your peak area of volatility from a short-term perspective up around 1842, 1845. So I suppose those would be kind of the short-term levels that I'd be looking at this week. If you're going to focus on more a major correction, change of sentiment, etc., really you'd want to see price action getting a run up, not just 1840s, but more into kind of 1870s, 1880s, because of course we've had very, very clear selling and staggered order flow. Nearly every second or third day, a very, very clear bearish engulfing here. So for example, here, and then of course into the back end of last week, we've had that steady grind lower in gold prices. So obviously looking to see, again, price action, order flow won't always go in one direction. They'll have a continuous battle of price action between buyers and sellers. And that's exactly what the markets are. There'll always be a reaction. So, of course, at this moment in time, we are getting pullbacks, retracements back into those levels as well. So 4 hour, 1 hour, very, very closely. Should be watching that levels with interest just to see if there is any sort of reaction. but gauging the volatility, as I said, in around those shorter term zones. Lastly but not least, moving across the indices, of course we've seen a very, very clear reaction, and even on Thursday, this was actually something I was looking at because, of course, consolidation took highs, took lows, came back up to value area. Very, very clear run up again to the downside, forming lows at 39.45. Now, since then, we've come all the way back up again into this value area, and I am currently short at 4011 on the S&Ps here. So looking to see if there is any sort of reaction. Now, personally speaking, let's wait and see. I'm risk-free at the minute, so just happy to wait and see how things develop. But order flow here at the minute is still very much bearish. Of course, if the dollar really does significantly weaken again into the close, then the likelihood is the indices could actually see a little bit of a bounce, a little bit of a recovery, which probably is going to invalidate that short-term setup. But of course, let's wait and see. You've got a lot of liquidity here around 4,040.30. And of course, when you look at the order flow, all we're really doing is unraveling that kind of January move. So obviously, the end of January, we've ran up from 3,900, 3,925 all the way up into this 41.50 level. And of course, we're selling very, very clearly at this minute. Lower lows, lower highs, continuous order flow to the downside. And of course, reaction, waiting to see if there's any sort of continued reaction from this 4,000 level to the downside. So let's wait and see. Of course, if the dollar remains weaker and we see that gradual decline continue into the close and maybe tomorrow, and we see gold continue to push up, we see euro, dollar, cable, etc. to push up, then likelihood is risk orientation is going to be a little bit to the upside in the early parts of this week, which means selling in the indices really just won't be an option for the first couple of days, at least anyway. So similar again in Nasdaq. Again, very, very clear selling. So if we look at the order flow from Thursday, very, very clear run up, new lows in the order flow, comes all the way back up into the value area, following the declines really from Tuesday and Wednesday of last week. And of course, we're kind of pushing back up into that 12.1, 12.200 level again. Now, again, Nasdaq with order flow, 4-hour order flow, very, very clear at this minute. Lows, break of structure, back into kind of the upper echelons of this value area, highs from the early parts of February, and since then it's just been very, very clear declines. Why is Nasdaq, why is the S&P's been selling off? Because of that rotational dollar strength. So if you're bullish dollar, you're obviously looking for weaker indices. If you're bearish dollar, you're looking for stronger indice outperformance, and it's just filtering the tap to see which side of the scenario, which side of the coin is I suppose getting that kind of filtration of strength. Now, of course, across the board, Dow Jones, very, very aggressive selling. If we look at Dow Jones last week, very, very aggressive selling, very, very tiered, new lows continuously playing out. And of course, every time we get any sort of recovery, it's sold off again. So as I said, 33,200, I suppose, should be a very, very important level, given that we had this very, very clear range of price action for the last probably about 4 weeks or so on the Wall Street with no clear recovery. So you've got almost a clear breakdown from 34,000 all the way down to 33s, where we've become a little bit more staggered in the selling. So of course, if indices is in control, watch those pullbacks. If indice weakness starts to come through, look for that, I suppose, shift in sentiment. And of course, filtering from weaker dollar to bullish dollar. And of course, from stronger indices to weaker indices as well, if that continues to play out. But of course, obviously watch that closely. Now, European indices. Again is really interesting because of course the Dax, Euro Stoxx, almost identical structures. So of course we had that grind through February. We're now creating bearish order flow. Why? Because of course we're making new lows continuously in this wave of price action. So in the last week or so in the Euro Stoxx and the Dax, we're seeing multiple lows being created. We're seeing lower highs being created. And of course today we're getting back up into this value area between 42.50, 42.75. So keeping an eye on this area as well to see if there's any sort of reaction up here to allow that correction. And of course, this is where we ended January, we've gone February with very, very clear buying. And of course, it wouldn't be conceivable to see us in March return all the way back down into this 4100, 4150 level down here. So worth keeping an eye on that. And of course, as I said, DAX is almost identical because of course, what are we seeing in the last couple of weeks? Continuous lows, continuous retracements. And of course, today, nice rally back up into this 15,400, 15,450 level. Now, of course, this was just a personal level that I was looking at because I was looking at, there's a lot of order flow in around this region. Now, we did break through it on Friday, but of course, a very, very clear selling. So even at this point in time, 15,500, worth keeping a close eye on that area as well, particularly on the 4-hour order flow is very, very nice and tidy at the minute. So worth keeping an eye on that. And of course, FTSE as well. Last week, we talked about the potential for a runoff back into this liquidity area down here. And of course, that's exactly what happened. Nice runoff, accumulation now. FTSE is trying to grind higher again, and of course that would mean that the pound correlation, so generally pound and FTSE kind of, well, normally there is a negative run up, a sentiment into indices or sentiment into the currency, and of course at this moment in time, cable again strength is kind of lacking in that, and of course obviously waiting to see, because of course FTSE climbing higher could put a little bit of pressure on the pound as well, given obviously with some of the speakers that's coming out this week. So of course FTSE trying to grind up back into this 8,000 level, because of course last week very clear runoff straight down all the way back into the value area, and of course very easy runoff from 8,000 all the way back down into underneath 7,900 of where we're accumulating at this moment in time. The session highs today 79.50, seeing of course can we get above that, because of course any break above 79.50 really does allow for that run up all the way back up into this 8,000 level, which is sold off very aggressively last Tuesday. So that's effectively where we are at the moment in time, everyone. Of course, watching price action closely myself. There's a few things there on my radar, as you've probably observed from some of those price action charts we've kind of looked at, and of course setting the tone for of course Tuesday and Wednesday, and of course the business end of the week on Thursday as well. All right, guys, we will be back, and ladies, we will be back on the middle of the week for another run through just in the price action, and of course getting a kind of a tone for sentiment. Does that dollar weakness continue? Do we return back into those value areas? Do we see that little bit of a baiting in dollar weakness become temporary, or does it become a little bit more sustained? And I suppose that's really the big things I'd be kind of recommending guys to keep an eye out on this week. All right, have a great week, everyone. Trade safe.